Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring. Today is Thursday, June 20th, 2024. How you doing? I hope you're doing well. I had a really great short trade today on NVDA that I wanted to share with you. It is a bearish fair value gap, and I'll run you right through it. This is NVIDIA on the 5-minute bars. First thing I want to bring your attention to is we have a high here. We run the level of liquidity to the upside. And then in this movement down here, we change market structure. Why do we change market structure to the downside? Because we took out this swing low. So we have a high, a little bit of a pullback. We go higher. In other words, we run liquidity of this high. We then, as soon as this happens, I am looking here to the left for the first swing low. As soon as we break that swing low, now we've changed market structure to the downside. So if we're in a bearish market structure, I want to short rallies. Okay, where is the zone for me to short the rally? Well, let me bring your attention to these three bars here. This one, and this one. This is the bar that breaks the structure to the downside, leaving it what is called a fair value gap between the low of this bar 1, the high of this bar here, number 3. I've highlighted it in red. So as soon as we break market structure, the market tends to, not always, but it very often tends to rally back up into this bearish fair value gap. Now I shorted, you can short anywhere inside this bearish fair value gap, but I waited right here at 139 even. Why? Well, because I looked to the left and I saw this big down bar here. Usually, if you have a big down bar like this and then you get back up to halfway of that down bar, that's usually going to act as resistance. So I got short here 139. Now, as soon as I get short, the first thing I have to do is I have to position size based upon the volatility of the market and the time frame that I'm trading. I place an emergency stop 2 ATRs above my entry. This is the worst case scenario for me. That's my emergency stop, 2 ATRs above. And now I look for my end of bar stop. Well, the end of bar stop makes sense that it would be this high here of 140.38. Why? Because that's the nearest swing high. And if we took out that swing high, then it can change the market structure back to the upside. So about 5% of the time, I'm going to hit that 2 ATR emergency stop. The rest of the time, if I have a loss, it will be because it closes above this swing high here. It's 140.40 actually. So those are the two stops that I have. Now, my maximum allowed stop is 2 ATRs above. Therefore, when we look for profit targets, I want to have an asymmetrical profit target twice what my loss is. So if my maximum allowed loss is 2 ATRs, I want to take my entry, and because this is a short, I go 4 ATRs to the downside. So my maximum loss is 2 ATRs. My maximum gain is 4 ATRs. So I put this trade on, and now one of four things is going to happen. One, I'm going to hit my emergency stop. Two, I'm going to hit my end of bar stop. Three, I'm going to hit my 4 ATR profit target. Or four, it's just going to end up somewhere in the middle. The day is going to run out and it didn't trigger any of these, and I just have to take the profit and the loss wherever it was. Okay, so anyway, this one turned out really nice. So I got short here 139. It crept up a little bit and I thought, oh, I don't know, but you know, when you short into these bearish fair value gaps, it's always kind of hard because you're shorting into strength. But remember, we change market structure. If you're in a downward market structure, you want to short rallies. Okay, so I got short here 139. Place my 2 ATR emergency stop above. End of bar stop is high above this swing high. My 4 ATR profit target is down here at 134.71. And so it was a little touch and go for a while, but you can see it really did respect that bearish fair value gap. And then we got the move down, and I did hit my profit target, my 4 ATR profit target here at 134.71 for a gain of 3.09%. Pretty good. And then I got out and I thought I did good, and then it collapsed another $4 after that. But hey, not going to get it all, but it was a really great trade. I was, down on the trade for a few bars, nothing too big, and then it moved on down, but it went down a lot lower. But still, that was a 3.0% gain on this fair value gap trade. Really good trades, fair value gaps, order blocks. If you'd like to learn more about my trading, I do have a podcast on the weekend where I go through and I show you all the swing trades that I've made on the daily charts and the weekly charts. We talk about when I got in, why I got in, what was the setup. I trade about 7 different strategies. So what was the setup? What were the confluences of signals? And then how I am going to manage the trade going forward, whether it goes my way or against me. Not all trades go my way, right? So, that's a big part of trading. But if you tune into that podcast, I think you'll learn a lot. I think you'll enjoy it. Do also want to mention that I do teach private one-on-one lessons in the evening time via Skype. I teach a 15-hour course one-on-one, which I think is the best way to learn anything. I teach you all the strategies that I use. I teach you step by step. And when you're done with that course, I know you'll be a better trader. So if there's interest, just send me an email. Email's in the link of the YouTube video here. But I hope you found this helpful. If you did, I'd appreciate if you'd hit the thumbs up button. It really does help out the channel. And yeah, I hope you like these videos. I hope they're helpful for you. And I appreciate you being here, everyone. And hopefully we'll talk to you tomorrow. Take care. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.